And good afternoon. Welcome into Market Talk for Thursday, February 11th, 2011. I'm your host, Jesse Allen, 2021. I don't know why I was thinking 2011. Great to have you here. I'm your host, Jesse Allen. I'm going back 10 years. That's how that's going. That's how my Thursday is going. Hopefully your Thursday is better. Thank you for being with us. MarketTalkAg.com is our home on the web. MarketTalkAg.com. You can find us Facebook, Twitter, Instagram, all at Market Talk Ag. Got a lot to talk about with the markets today. A good rebound in grains after a sharp sell-off on Wednesday. Let's bring in our good friend John Heinberg with Total Farm Marketing by Stuart Peterson. John, good afternoon and welcome to 2011, apparently. I know you were laughing there in the background as I said that.
Well, prices are trying to get back to that level. We'll have to see how things can hold out here in terms of the grain market at that time frame. But yeah, 2011, that was probably a winner just like this one and the cold temperatures that we're going to get up here in the north this weekend.
Yeah, it probably was. It probably was. But hey, gotta have some fun and a little bit of little bit of laughs on the show every now and then, and I got to mess up from time to time. I wouldn't be human if I didn't. Anyway,
you can just chalk it up to a long week. I said yesterday, it's like, boy, is the week almost over? And I realized it was only Wednesday. So it's been that type of a grind the last few days here. That's for sure.
It has been that type of a grind, and let's talk about it. Tuesday, we got the WASDE report in, rather disappointing report, I think, to traders. And then we saw the sharp sell-off on Wednesday with all that profit taking and the longs. They decided we're liquidating, we're getting out of this market. The bulls went to the sidelines, and then we come back in here today, and we get the weekly export sales and shipments numbers. We get a good move and try to regain some of what we lost in corn and beans. I know wheat was a little lower. What's your initial thoughts after seeing today's closes?
Well, I'm a little more concerned that maybe today was a dead cat bounce and actual turn. We'll have to see how the week finishes out. Obviously, like you stated, we got the USDA report on the corn side was disappointing. The USDA decided to kick the can down the road per se and just kind of have the prove it mentality in terms of the shipment side. And was kind of encouraging to see shipments last week coming off in that export report this morning at 1.5 million metric tons, which was marketing year high. And so we're going to get to that window. We're going to start seeing these grains really move out. So that was the supportive side, and sales again still above expectations. So the market still feels that maybe we're not pricing things in the level we need to here, but I talked about it last Thursday. I've got some things that makes me very cautious in this window. Here we got obviously that report's now behind us. We got a 3-day weekend this week. We're seeing that South American weather and harvest start to ramp up down there as well. Chinese New Year holiday starts today, so they're now out of the market. And then next week we got USD outlook for them, as well as we've got the options expiration for March options on Friday. So I'm looking at a corn chart today. You go look at that March chart, you put it on the weekly mode, we've got ourselves a pretty big reversal building. So tomorrow's price action could be pretty key in determining what the next few weeks might be. Typically, March is not one of our better months, and obviously that's probably influenced more by the South American crop coming on board. But so we'll have to see how things kind of trend, and you're still looking at a managed money position that's extremely long in the corn market. So, we saw the profit taking this week. Does some more ensue if we continue to see more of a negative technical picture and we're missing the news that we need to keep the bulls happy in this market?
Well, and on the news front, you hit on a couple things there, and I know it sounded like we could get some expectations from the Buenos Aires exchange on Friday as far as an update on the Argentine crop. And there's some rumors out there that China may have scooped up some more U.S. corn ahead of their week-long Lunar New Year holiday here as they go into that here this next week. And I think that's going to be something that's going to influence our markets too, is China's going to be out of this market for the new year.
Yeah, and what you said there too, in terms of we need some confirmation on that. And sometimes it takes a couple days for them to come out. I did hear that rumor as well. And realistically, if they're looking for corn or beans, here we are. Yesterday or this morning, we were immensely on sale. We're well below the price levels where we were selling those same bushels, a week ago, especially in the soybean market. And again, the job of the market is to ration supplies, and we're not doing that at these price levels. So again, I kind of sounded negative in my tone. Let's say maybe more cautionary just because of the calendar and where we are with things. But still the long-term picture looks supportive, especially in the soybean market with the adjustments we saw this week. But the corn market, those adjustments might come down the road. I guarantee if we start cranking out 2 million tons a week on corn shipments, you're going to see the USDA make those adjustments and tighten up tighten up that supply picture even more. So, maybe reflecting more on those prices. But it might take a little bit to get through. Maybe we have to get into the planning window and then see the weather and just really get that market to want to move. But again, still the long-term picture is friendly in the grains.
Yeah, very, very friendly. And, we talk about those shipments and that pace of shipments. And what is it? I saw actual shipments for beans exceeding the pace needed by USDA by almost 400 million bushels, I think. So soybeans, definitely a lot of good news there. And I think back to corn, it'd be interesting to see if we could pick up some of those shipments. Now, if I'm a producer here, John, and I'm looking, say, at this corn market and looking to maybe move some old crop corn that I have left in the bin or make some sales for, this fall for 21. I mean, is it something where I do a little bit of wait and see here with where this tone in the corn market is at right now until we start to get some of those planting intentions? What are your thoughts? What's some advice?
Yeah, that's going to be a good possibility. I've dealt with that question a little bit today too. And, again, I still think you should have a little bit on the books here. You're looking at probably a starting point that's a lot better than last year at this time frame. If you're cautious, look at some shorter term puts just to make sure we got a floor into this market in case of some type of black swan event. You just don't want to see things disappear. But with that being said, again, we're still looking at a market, especially on the old crop side, that the supply picture is extremely tight. But again, you got to be cautious. There's a lot of air in this market. We saw how fast it moves again, even yesterday. With the sell-off in these grains, it doesn't take much. And when you're dealing with a market that's traded by computers more than human beings, it can fall very, very quickly as it just runs through stops and there's nobody in the way to step in front of it.
Let's talk the wheat market a little bit here, John. Just briefly, I know we're getting all this cold weather across the country, and there is some concern of some winter kill here as well as over in Russia. And, that report from USDA back on Tuesday, really not many changes to the wheat side of the equation. Maybe talking about China, maybe getting a little more wheat for feeding purposes. But again, I didn't see a whole lot on that USDA report that really could move this market one way or another. And then we look at today's close down slightly. Any thoughts for our wheat growers out there and some things they need to look at here moving forward?
Realistically, when you talk wheat and you talk the USDA reports, it's nice to know where our stockpiles is, but it's the focus on where we are in the global picture. And actually, the global numbers were relatively supportive on that report there on Tuesday. We saw the bump up in Chinese demand as well as a bump up in India's demand. And again, when you start looking at the exportable supplies, about 60% of the global wheat supply is sitting in China, about 51%, and India about 9%. So the rest of that is what's only available. So there we're actually looking at a relatively tight supply picture in terms of the wheat that's going to be moving around from country to country because the Chinese and India wheat is locked in and it's not going anywhere. So, that was encouraging to see that. And it was actually the wheat market that kind of turned the markets around this morning. Obviously, the cold forecast coming across the plains, bringing some support into the market there as well. Right now, it's a wheat market that looks for some direction. I still like some of the upside potential that's there, especially if we see things kind of come out of dormancy, a little choppy this spring, or we got a battle for acres with some of that spring wheat up in the north. So I like the upside here. That's still a potential, but at the same time, make sure you continue to watch the value side of the equation. So again, what's that put us to? Probably a choppy sideways market, following the other grains here in this window. Keeping an eye on the outside markets as well. If you're making some sales, get out some time, buy some calls over top, just in case all of a sudden we see corn take off or beans take off, takes wheat with it. But at the same time, when you're still looking at 630, 640 wheat, you got some pretty good value that you can put a floor under.
Let's talk hogs here, John. And I wish I have a hog sounder or a pig squeal. And this market's just been on fire this week. And it continued on Thursday. I mean, we saw good numbers for pork net sales. The market seems to just be relishing the fact China continues to seek more product. Domestic demand strong. That cutout up over $6 today. I mean, I know this February contract's set to expire here tomorrow, but that's been holding pretty strong, and we've seen good strength in these deferred months. What are your thoughts on this hog market and this strong strength we've been seeing throughout the trade.
Yeah, the hog market can be one. When it gets going, it just kind of puts its ears back and really starts running. And right now, it's probably the strongest market in the ag sector is that hog market. And you kind of touched on it right there. It's all about the demand. Here we see weekly export sales again close to 40,000 metric tons, shipments close to that level. China is still the top buyer, but it's still very good to see those traditional buyers, Japan, South Korea, Mexico. They're still very active in the market. It's not like we're shifting everything just to one country or another. And realistically, you go look at the fourth quarter, Japan jumped aggressively into the hog market in terms of buying product while we're still shipping out to China. So that was encouraging to see that even if the Chinese demand dwindles, we still got those other traditional customers in. Now, with that being said, yeah, it's a market that's really pushing through. Again, new contract highs in the front months today, as well as those longer-term deferred contracts. It's just been really strong. Now, I am getting a little bit cautious. We'll see what happens when February comes off the board tomorrow. Still a little bit of a premium to the index there. So I expect the trade maybe to be a little more choppy. That April contracts really get into overbought territory. And typically this is a seasonal window where April hogs kind of roll over a little bit. So don't be shocked that we see some movement back here just because of the overbought condition. And realistically, the market could use that. So for producers out there, you're starting to look at those hog prices, 84 in April, 90 plus out there in June, July, and August. Probably a great window to use some type of strategy to build the floor. I'd probably target puts first, because if this market wants to continue to climb, you don't want hedges sitting out there working against you, but at least make sure you got something in case all of a sudden that Chinese demand disappears or something happens on the news front to rotate this market over and sell off aggressively.
You went right to where I was going to ask you. I was thinking in my head, is this a good opportunity to get some puts underneath this market? And it really seems like it, just because this market could tip over at any point. And you mentioned that news cycle, and I think part of our strength we're hearing as well, maybe you could add to this, some of this disease pressure in Asia, African swine fever, PRRS outbreaks over there and here in the U.S., some PED virus. It just seems like we're getting a lot of different newsmakers on that front that is influencing this hog market as well.
That's a big part of it. We're hearing a lot of disease pressure in terms of the Chinese hogs as well as other regions in that area of the world. We just had the newspaper article, or the article come through yesterday. 3,000 hogs in Hong Kong were getting put down because of African swine fever. We're hearing outbreaks of PEDV in China. As much as they're getting this herd repopulated, they're running into some issues there that they're still got to work through. And because of that, this market is anticipating that strong Chinese demand, and the weekly export sales numbers continue to show that. So as long as they stay active in the markets, this market's probably going to have an underlying level of support underneath, even despite the large hog numbers. I mean, you're still looking at a daily slaughter here of 490,000. That's a lot of pigs that we're still working through. But when you see that those products push out at the level, and you look at those cold storage reports and the fact that the pork supplies are just tight, that just shows you it's kind of like a hand-to-mouth type process. We're killing those hogs and the product's moving.
What about cattle? Let's talk about that here. And I know the winter weather, the cold temperatures really affecting not only hogs, but cattle as well, affecting those producers out there, affecting feedlots, everything else, and snow as well on top of it. Sound like we could get snow in parts of the country that we don't normally get a whole lot of snow. And that could slow things down in feedlot country as well. And, just looking this week, it seems like we're kind of at that standoff point where we're getting some deals done around the 114 live mark, 180 dressed, with asking prices, a couple dollars higher than that, 115, 116 in the south and 185 in the north. And it seems like this livestock market is looking for a reason to take off higher, but we're just not quite there yet. Would you agree with that, or what are your thoughts?
No, that's exactly what it looks like right now. This cash market just can't seem to get a bid, and it just struggles here. And some of that's because of the large supplies that we're dealing with. We're looking last week, carcass weight still about 18, 19 pounds over last year. That's a lot of product still getting put into the cooler. We're still working through those heavyweight cattle, and that's what's weighing on the cash side of the equation. February contracts in delivery, and we've had a good number of deliveries against that contract, so that also puts selling pressure into that front month. here as well. So right now, I think we need to kind of maybe get February out of the way. We got a little bit of time before we do that, and then maybe got some more optimism. I was actually encouraged. I was a little concerned the way the prices handled yesterday, that maybe we see a little bit of a break, because cattle's had a good run. It was getting a little overbought as well. We do have a reversal on the daily charts in those front months from Tuesday that still has me kind of cautious here. But it was good to see the cattle dig in today and at least put a little premium in, even despite that weakness in the front months. So again, I still like the longer term picture, staying choppy at this stage. The weather is going to be a concern. The retail values are strong. Packers at good margins, but right now there's just too many cattle for them to choose from, so there's no competition, and that's why the cash bids are lacking.
And I think it'll be interesting to see once we do get through this cold snap, if we do get some of these snow events, and they're talking parts of Oklahoma, Kansas, etc. If that kind of makes it to where we can't get any cattle out of there for a week or so, I wonder if that might be the trigger here on this market overall. I think it'll be interesting to see if that happens, or if something else here down the line maybe sets the match under this cattle market, John.
That's something we're going to need to see, and it's going to really have to come down to, we're going to have to watch the weights. We're going to see the production have to start to slow down, and so that'll be a big factor. I was even hearing some talk today that we could see calf prices 2-3 weeks out still not moving anywhere, some cattle getting locked in that window. So that makes me a little bit nervous. Again, as a producer, you're looking at the board. When we start talking 120 plus in April, 119 out there in June, or pushing the 120 window, in the last 5 years, that's a pretty good number to start thinking about things again. I would use put strategies there for sure, just kind of get a floor underneath this market in case things do not start climbing. But if they do, I do have some upside targets I like on the April contract, but we're going to need to see that cash market to move to maybe push us up into that 130 level. So I'd rather have a put there at 122, 123 underneath April versus a hedge.
Anything in dairy we need to look at here today for our dairy producers listening in, John?
Well, a big jump in prices today. I was kind of trying to figure out where that came from. My thought is it's probably coming from the stimulus package that's getting put together. I know they're putting quite a bit of money into the SNAP program. I'm not sure what's getting earmarked exactly into the dairy side. But, we popped limit higher today in that March contract, and realistically, it didn't come from cheese trade up 2 cents today. So again, that volatility, that thought about money flow coming in, buying dairy products gives that market some support, because it's been a difficult go. But right now, I think as a producer, when you start looking at the supply side of the equation versus the demand side of the equation, even though things are improving, we still got a long way to go. And if you got some value, you need to make sure we find a way to get a floor under it here, whether locking in through the plant, owning it up to the upside on calls, or just make sure you're using, the DRP program or some type of program underneath to give yourself a floor, because we just don't know where things are going to go in terms of the milk price. If all of a sudden we see an influx of government buying and bringing food, bringing cheese products back into those like Farmers and Family Food Box program, you don't want to be sitting there with hedges put in place. But $17 is actually some decent value you need to protect.
John, always great insight here today, as you always bring to us. And I know we always mention this as well, but if producers need a little help with their marketing and need some advice, they can reach out to you there at Total Farm Marketing to get a little help.
Yes, give us a call at 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And feel free to check out our website. We got a lot of great information on there, weather, market prices, as well as just how to reach out to us and look at some of the webinars and things that we host. So a lot of good information for producers to kind of educate themselves, especially when it's 30 below here on Sunday morning with wind chills. I'd rather be learning a little bit about what's going on in the market world versus being outside in that cold.
I couldn't agree more. You can learn more at totalfarmmarketing.com, and you can find John's contact info there as well. John, I appreciate the time as always. Stay warm up there, my friend, and we'll talk to you next week.
Thanks, Jesse, and everybody stay safe out there and stay warm. We'll see you next week.
John Heinberg with Total Farm Marketing by Stuart Peterson, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, February 11th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.